Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to the week that was. Indian assets trended lower as global sentiments continue to remain weak as incoming inflation prints raised the probability of continued hawkish policy actions by central banks. After a weak start to the week, Indian equities traded sideways, posting losses in 3 out of the 5 trading sessions. The Nifty index fell 0.7% over the past week but outperformed most emerging market pairs. With this week's loss, the Nifty index year-to-date 2022 price returns fell to a negative 2.5%, while the gap from its October 2021 peak widened to 7%. Broader markets underperformed Nifty index, with the Nifty Mid-Cap index down 2.8% and the Nifty Small Cap index down 1.7% for the week. Among sectors, IT and banks were the only sectors to end in green, while utilities and realty were the worst performing sectors with cuts of over 4% during the week. The Indian fixed income markets remain under pressure as bond yields rose across the curve amid a higher than expected domestic inflation print, sharp rise in US bond yields, and cautious investor positioning ahead of the release of RBI's minutes of the meeting. For the week, the 10-year Indian government bond yields rose 1 basis point to close at 7.47%, while the 3-year and 5-year Indian government bond yields rose by 3 basis points and 6 basis points, respectively. After weeks of nosedive, the INR ended flat for the week to close at 82.3 per dollar, as the impact of stronger US dollar and rising US bond yields were balanced by lower crude oil prices and improving foreign investor flows. During the week, we also had a few macroeconomic data reported. The first data was on India's CPI for retail inflation, which rose to a 5-month high of 7.4% year-on-year in September 2022, higher than markets' consensus and last month's reading of 7%. Prices accelerated for food articles driven by vegetables and cereal products. However, cost of fuel and light grew at a slower pace. On a monthly basis, CPI inflation rose 0.6%. Wholesale price inflation, or the WPI, stood at 10.7% year-on-year in September 2022, lower than the reading of 12.4% recorded last month. Moderation was observed in prices of manufactured products, driven by lower rise in basic metals and fuel and power products. On a monthly basis, wholesale prices dropped by 0.7%. The second set of data was on India's industrial production, which contracted 0.8% year-on-year in August 2022, driven by a slowdown in manufacturing sector output, which contracted 0.7% as production declined for pharmaceuticals, electrical equipment, fabricated metal products, and machineries. Mining and quarry sector output contracted 3.9%, while electricity output expanded 1.4%. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.